What's up, everyone? Dylan here. I wanted to hop on and go over the trade that I took last Wednesday, which was on the FOMC day. It was a phenomenal trade. It had the follow through that I was looking for. So I'm going to go over the analysis behind it, what my plan was, going over the entry, the stop loss, the targets, and so on and so forth. So with that said, we'll get into it right now. So this was the overall, larger time frame chart that I was looking at going into that week. Okay, so FOMC was Wednesday. I posted a video for you guys on Monday, which displayed this. So we have we had this nice parallel zone, right? Very nice support. You could see numerous times ES was, making lower lows, and each low was finding support in this parallel channel. On top of that, we also had a horizontal support line, right? You could see it was support here, here, and then right here. And then yet again acted as support on May 2nd, which was Monday. So, I like the fact that ES was able to bounce at key support during the week leading up to FOMC. So this was on Monday, that very important bounce. And then Tuesday was this little candle right there, basically a basing day. And then Wednesday was that massive candle on FOMC. So going into Wednesday, I told all of you that I was bullish, okay? This was the video that I posted last week. I posted it last Monday. If you didn't see it, I recommend checking it out. I talked about the fundamental reasoning behind my bullish thesis, okay? On top of the fundamentals, I also talked about the technicals that I just went over. So, because I was both fundamentally and technically bullish leading into FOMC, I was focusing on a long position. Okay, so now I'm going to show you the Discord. So this was the morning of FOMC, right? Clear as day, bull case. Fed hikes 50 basis points as expected, and Powell states that a future 75 basis point hike is unnecessary. So before Powell got onto the podium, I knew exactly what to listen for. If those two things were the case, A, a 50 basis point hike, and B, a 75 basis point hike was off the table for future meetings, I wanted to take a long position, okay? I had the overall thesis, right? Larger time frame support. I had the fundamental thesis, and all I needed was this, bull case scenario to play out, okay? So let's go on a smaller time frame. I'm going to get rid of this. I'm going to make everything clear. Okay, so here we are. This was the 4th, right? May 4th, okay? So during this time is where they came out with the fact that it was a 50 basis point hike, okay? So as you could see, during this candle, and this candle, it wasn't too clear, okay? Price was going up. Then we had a down move, then it was an up move, then it was a down move. There was not much conviction, okay? So I got the first piece of the puzzle when Powell, came out and said, okay, we're going to do a 50 basis point hike, right? That was the first thing. Then he came out and said, basically, quote unquote, he said, a 75 basis point hike is off the table for future events as of right now. Once I heard that, I said, okay, That's exactly what I needed to hear. Let's figure out where I'm going to get long, okay? I heard what I needed to hear. I was backed up with fundamental analysis and technical analysis going into the meeting, and his dialogue matched exactly what I said in pre-market, right? Bull case, clear as day. So now that I have the dialogue that I wanted to hear, all I have to do now is come up with a plan that makes sense, okay? We were focusing on 41.52 that entire week. Dylan, why 41.52? Let's see, right? Daily chart, 41.52 has acted as key support, okay? This is a daily chart. We can see key support here, here, and then bounce, 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 bounce. Okay, so 41.52 has proven to act as clear support on a larger time frame. Okay, history repeats itself. If it, acted as clear support before, chances are it's going to act as support again. Okay, so now I have an entry. Okay, now if you only have an entry, that is, that's nothing. That's basically nothing. Without a fully structured plan, you should not take a trade. A fully structured plan consists of a thesis, right? This was a bull case thesis. I gave you guys the confirmations to back up that bull scenario, right? So I had a thesis. My entry, right, 41.52. Now I need a stop loss and targets. Once I have those four things, all I have to do then is wait for price to get to my entry and I execute, right? That's it. Okay? It sounds so easy when I say it over this video, but it's way easier said than done. So, with the fact that I now have an entry point, now it was time to come up with targets, okay? So, with that said, let's go over to the key levels, right? And all I do with these is I scale out at each one, okay? So 41.52 was our entry. And you can see I didn't change these, right? These have been here since April 8th, well before the meeting, okay? I didn't come on here and change it. You had these levels essentially a month before the meeting, okay? So 41.52, next key level 42.30, right? So let's come over here. We'll do 42.30 for 3. There's that. What's the next level? 4266.25. Let's put that there. 4266.25. Okay. And then the last one, 4293.75. Okay, 4293.75. Okay. So, with these key levels, now I have areas to take profit. I'm going to make these black to distinguish. Okay. So these are what I use the key levels for. The key levels have a few different, uses, but one of the uses for the key levels is for me to have an idea of where to scale out. So this was perfect, right? All I'm doing is coming up with a plan based on my key levels and usually zones, but in this case there weren't any supply and demand zones for this particular play. This was solely based on key levels, technical analysis, and fundamental analysis, and waiting for Powell to come out with his dialogue. So now we have a thesis, an entry, and targets. The only thing we need left is the stop loss. So Dylan, where are you going to put your stop loss? My stop loss was 20 points, 41.32. Why 41.32? Let's go, right? Let's see, I'm gonna make this, let's make it orange. Okay, 4132. Boom. Okay, 4132, key support, right? Intraday support, and then support here. Okay, so all of these levels, right? Not even levels. Your entry, your targets, and your stop loss need to make sense. You cannot, or you can, but you should not just pick a random level out of your ass, okay? It's not going to go well in the future. All of these things, right? When I say things, I mean entry, target, and stop loss, you should have an answer for. If I said, hey, Johnny, why'd you pick that target? Johnny should say, oh, Dylan, good question. Here's why I chose it. It was support over here, resistance here, and support there. It was a very nice support and resistance level in the past, and that is why I used it as my target. Okay, Johnny, why'd you pick the stop loss? Oh, same thing. It was resistance from last Tuesday. You see what I'm saying? If you do not have an answer for those types of questions, that means that you are picking bullshit levels. Okay? And like I said, it doesn't have to be a level. It can be, whatever your system consists of. If you use Fibonacci, if you use VWAP, if you use, EMAs, or whatever the case may be, all it has to do is make sense. You need a reasoning behind it. Okay, so I picked 4132 as my stop loss because it had acted as support for that particular week. So essentially, if it failed to hold 4152, came down and failed to hold 4132, I would have stopped out. Okay, so essentially, I was risking 20 points to make 80. That's a 4-to-1 risk reward. Usually on a normal day, without any major catalyst, I would not look for an 80-point move. Okay, on a day trade. This was, I was planning for this to be a day trade. The reason why I was willing to take a 4-to-1 risk to reward is because there was a catalyst backing it up. So when you have a major catalyst such as FOMC, you can make an extreme plan, right? Because you're going to have enough volatility and momentum in order to push price to those levels, okay? So now on the chart, we have an entry, we have a stop loss, and we have targets, okay? Another one of my targets, which I was going to get into, I guess I'll show you guys now, and I highlighted this in the Discord, okay? It was this trend line. It was prior trend line support, now resistance, okay? You see? Support, 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 and support, okay? What do you know? Is this a coincidence or what? Right? Look at this. Lines up perfectly, okay? So not only did we have a resistance horizontally, it also perfectly matched up with this trend line support. Support now becomes resistance. All I'm doing is coming up with different pieces of the puzzle and mashing them together. Okay, that is all I'm doing. I have shown you guys this exact strategy. I can't even come up with a number. Like hundreds of times. I've made tons of videos, and every single video goes over the same exact system. Okay? You guys have my whole system right in your fingertips. You just have to, get consistent with it, right? Obviously, I didn't know this. I didn't know how to use this system 2 years ago. It took me a lot of time, a lot of losses, a lot of trial and error. But that was essentially my final target because it was a confluence area, an area of confluence, meaning there was two separate resistances that overlapped. Okay, this can be the case for a horizontal level, a trend level, a supply zone, a Fibonacci retracement, whatever the case may be. The more overlapping confluence levels you have, the better. Okay, so now we have a full plan. Okay, I told you guys the thesis. I heard exactly what I wanted to hear from Powell. And all I had to do now was wait and execute accordingly. Okay, so if we go to a 5-minute chart, okay, I entered 20 lots here. Okay, the reason I didn't wait for this is because I didn't think we were going to get there. Okay, once I heard the 75 basis points were off the table, I wanted to get in. I still had these exact same targets. I just didn't believe we were going to get to 41.52. But I was obviously wrong. So I got into 20 lots around here, right below these two lows, dipped down, got into 20 lots, came up, and then we got this really nice washout. I love buying capitulation panic sells. I love it. I love it. I love it. Okay. Essentially, when you have this big drop on a 5-minute chart, especially, when it's backed up with a catalyst, this candle washes out the longs, right? The people who got into longs, right? Both calls, futures, shares, whatever the case may be, when they see this drop, they panic and they sell. For me, I like two things about this drop. A, it was going into a key support level. And B, it was on bullish news. So when you get a drop on bullish news, like a panic drop right into the news, oh my gosh. It doesn't happen often, but when it does, you buy it, okay? Sometimes stocks drop on no news. It's called capitulation. Look it up. I think Carmine actually posted a picture on the InvestiTrade Instagram explaining what capitulation was like a few days ago. So once I saw this nice drop into my level, I doubled down. So I bought 20 here and then 20 lots right at 41.52. I had my order sitting there ready to rock. Okay. Once it got there, there was a ton of people who stopped out, right? They panic sold. And then a lot of, say institutional guys, not just institutional guys, but usually smart money will enter when retail panics and sells. So, a lot of market participants got in here. And as you can see, it absolutely ripped up. So as ES was, coming up, I had a sell order just sitting there ready to go. I sold 10 lots right at 42.30. Then I scaled out along the way because 42.30 to 42.50 was acting as previous resistance. So I was kind of just dishing 5 lots, right? So it was 10 lots, then 5, then 5, then 5, and then, I kind of just scaled out on the way up, 42.66, and then my last scale was 42.93. I actually sold a little too many, so I actually bought the ones that I accidentally sold up here, down here. So here is proof. Not that you guys don't believe me, but there's always haters out there that'll say, that's fake. You didn't really do that. Here is proof. Not that you guys need it, but like I said, watch this. Show fills, May 4th, apply. Okay, save, boom. So you could see the arrows down here indicate the buys, and then the red arrows represent the sells, right? So if I go to settings, I could do show fills, click that off. You'll see the arrows disappear, and then We'll put them back on. May 4th, apply. Boom. Okay, so just like I said, full disclosure. Like I said, I entered on the first dip there, and then I entered the next at 41.52. Right, so 41.52. This charting platform sucks. Then 42.30. You can see that was my first scale out. Yeah, this charting platform sucks, right? So that red arrow indicates selling, 42.30, then 42.66, and then 42.93. Okay. So, like I said, on the way up, my first scale was 42.30. Then I scaled up along 42.30 to 42.50. You can see I sold 2 more times right there and right there. And then 42.66, I sold more. And then, like I said, my final target was 42.93, where the trend line, the prior trend line support lined up with that key level. And then, as you could see here, I bought 4 more because I accidentally sold too many up there. So that's it, right? Like I said, overall, it was a great trade. Had a ton of continuation, and that is literally how I come up with plans. I mean, there's no secrets here. I told you guys exactly what to look out for, right? In the intraday, gave you guys a bear case and a bull case. This is exactly what Powell said. Once I found that out, I came up with a key support level, which was 41.52. You guys had all of these levels. I came up with a stop loss, targets, had the thesis. And then once you have that plan, all you do is execute accordingly, okay? So this is the biggest thing. If the trade works out in your favor, you follow the plan. If the trade goes against you, you follow the plan. You see how that works, right? You follow the plan regardless. When you are prepared to take a trade, right? You have a stop loss, you have an entry, and you have targets. You are prepared, then you are ready for any outcome. Okay, that is key. If you enter blindly and then sell blindly, you're not going to do well. You might get lucky here and there, but over time, it's not sustainable. Trust me, I used to do it. I used to force trades left and right, and I would lose money consistently over time. Did I have good days when I used to do that? Of course. But over time, there were more bad trades than good. So if you do not plan out every single trade before you execute, you're setting yourself up for failure, period. Okay, it's a guaranteed. And I told you guys too, if you guys were long, I said ES is about to backtest prior support, right? 2 areas of resistance, good spot to scale out if you're long, right? I gave you guys updates on the way. The reason I did not alert this trade in the first place is because it was during FOMC. There was more risk involved, okay? So I didn't want to put the Discord post out to, a few thousand people and then, blindly follow me, right? That is not what I want. When you have a few thousand people watching your every move, you're kind of liable for their actions. So on a normal day, yes, I would have definitely alerted this, but because it was very, very, very volatile and it could have gotten ugly quick, I did not feel comfortable. So, but basically what I'm saying is you guys had every single piece of information before the trade happened. There should be no reason why you didn't, capitalize on it. So with that said, hopefully you guys learned stuff. If you guys have any questions, hit me up. Hopefully I answered everything. I think I did. And as always, feedback is so appreciated, both good and bad. If you didn't like something, hit me up, let me know, okay? Peace.